Welcome to Java. Thank you kindly for joining me as always. It is February 21st, 2025, and it is also Friday. So there is a lot to go over this morning prior to the weekend, quite a few things shifting. So we'll look a little bit at what is in review. But first, we'll start as always with what's going on with the markets. Now, the MMRI has pulled back slightly down below the 300 level now. So in high territory still is just below the extreme level, but more of the point is that it's kind of leveling off, pulling back slightly. The elements of it, the 10-year yield, as well as the relative strength of the dollar, both pulling back as well. Now, the 10-year yield is below the 4.5, as we were speaking about yesterday. The 5% level is really kind of a danger level that we need to watch, especially if it reaches there rapidly. So we're on lookout for this. At the moment, relative strength of the dollar below 107. So it's getting back more into a better range where it is not really killing foreign currencies, if you will. A little bit more stability working in here. Now, with the fear greed meter, we're in neutral territory at 45. So that also pulling back a little bit more towards the fear gauge. We've still got quite a few retailers in here, although volume is dropping. So with that volume drop, that does mean that there is more volatility. Daily driver is looking a bit weak. However, it's holding. The indices, major indices, still looking weak on the open, with the Dow taking the largest hit. So they're all currently in the red and expected to open weak. But the futures are showing a bit of recovery. We'll see what happens. We've got gold pulling back from that 3,000 level that we were saying is major resistance, so no shock there. Crude oil also dropping a little bit on all of these peace talks. Now, Fridays, typically, there's a few things going on politically, geopolitically, that could have an issue, and that would reverse crude oil. So caution on that one, being volatile. Now, back to the daily driver, weak but holding. We've got long dated bonds are lacking interest. Literally, the yields have pulled back. So we've got muted demand for long dated US treasuries. And they're saying this is raising an alarm, which I agree. Is Bitcoin at risk? Not necessarily. So, why they don't want long dated US treasuries is because they believe there will be higher yields coming, which means a sell off in the bond market, which is not a good harbinger for United States markets. Basically means it's weak. So we'll watch that. Now we've got Asian markets are strong on some quantitative easing that they have done. So with this overnight, and Europe is doing well, slightly green, nothing major, but also doing quite well at the moment as well. Now, do we have Doge QE incoming? They've been speaking about $5,000 return checks, even if it's not that much. I want to speak about the effect because if they announce this, the effect will be immediate. It will pump the markets immediately because it is quantitative easing in a different form. The last time, if this follows history, with C19, I'll say, pumped the markets quite a bit, gold as well as cryptocurrencies. So if they do announce that, expect that to be the result of it, and hopefully you can position yourselves in ready for that. Now, Bitcoin above 98,000 again. We've got Ethereum's climbing a bit, XRP under pressure, and Solana, as I said, kind of holding here, but I expect it to recover a bit more and head more towards that 200 level eventually. No idea on exact timing though. Looking at the calendar, we are getting PMI just after opening at 9:30. We are getting existing home sales, and then also some, more Fed people speaking so that they can keep this in line. Now, we're getting consumer sentiment for the final, and I'm interested to see what that says. Truth be known, consumer sentiment is not that strong in the streets from the gauges we see. Now, I want to talk about a couple of things with the feds. They're talking about BAR, urging new regulators to uphold standards. This is mostly in with banking regulation. And what they're saying is that outlier banks, this is what they're calling them, outlier banks, anything but their major banks, aren't prepared for financial stress. And this is kind of a setup to where if these begin to crumble, because of some of them are, they've got roughly 1 in 4 are not strong and are ready to either merge out or just fail. So 1 in 4 banks is not good numbers. So they're talking about the short-term buyback program and a lot of the Fed switcheroos for the quantitative easing and the printed money. Now, shifting over to the EU, they're having an issue because at the very baseline, they're looking for more United States gas, liquid natural gas, as a renewable source to replace Russian supplies. Well, a major trouble with this is that it is much more expensive to get it from the United States, not just price-wise, but also because delivery adds quite a bit of overhead to that. So if you count that in and factor in that increase overall hits from the very bottom of the economy because they need this for the heat, but also for the manufacturing. Now, we know this is all geared towards control to put them into a corner, so to speak. We've got the European Central Bank ramping up wholesale CBDC platform development. I spoke about this the other day. They are heading towards a central bank digital currency and it is all but approved on the last lines. Now, they are adding the growth of privately issued cryptocurrencies and stable coins because they're looking at competing with the private sector. They want to feed these to their commercial banking institutions and get people away from using alternatives. They're trying to rope them back into the banks. Now, not long ago, we had Lagarde say Bitcoin was too volatile, that it's illiquid and unsafe to be used as a reserve for Europe's banking institutions, and vowing that she was quite sure that they would not use Bitcoin ever. So, interesting remarks out of her. Moving in the opposite direction of the United States. Now, along with cryptocurrency goes the quantum computing and artificial intelligence, all hand in hand. So, BlackRock, Vanguard, UBS, and State Street all pouring money into, these are all quantum names, Rigetti, D-Wave, IonQ, and Qubit. So they're looking at the top five holders of quantum computing companies, according to the SEC, and they are piling more money in. So keep an eye on this. At the same time, with the real economy, there are growing signs that the labor market is slowing. This is coming from Bostic, from the Fed. We've been talking about employment in decline since last year, around October, when they started having mass layoffs, and they're just waking up to this, showing that there's growing signs, has been coming out for some time. So going back to the UK manufacturing sector, this is the UK in specific, not so much Germany, they're still in trouble, but the cut in price for LNG could give them a boost. Now, their manufacturing contracted the most in 14 months. They're in a recession, a decline ahead of the United States. Their recession began roughly last June. We've got Eurozone activity stagnating as price pressures prove sticky. Well, the price pressures are sticky because the energy, which is at the base of all of this, is having issues. Now, United States natural gas prices surging to a 25-month high, and they want to push the EU into purchasing from the US. That's not going to give them any kind of a boost. So there will be a lot more. They're looking forward to the talks with Russia to see if they can get their energy at a lower price. If they can, their economy has much better chance of recovering more rapidly. Shift back to the east. I want to speak about Japan a little bit. And this is because as their yields fell, this means that their debt being purchased. So their main central banker, Ueda, has said that they can step in to smooth the market, and that if the inflation, which is accelerating, that they're going to stay on a rate hike path. Well, beyond hiking their rates, they can also sell off United States debt. And it came out saying that they would be willing to do whatever it took in order to, as he says, smooth their market. So we got a taste of this last August. Now, if they chose to, and what they did last time was just halted their purchases. So if they chose to actually sell a significant amount of US debt, that could really shake United States markets a bit again. So again, keeping an eye on that. Now, I just wanted to mention a couple of other things. Microsoft, now this is back to the chip that they had come out with. It's called Majorana. I don't know how they came up with that name, not Cortana. I think they're trying to link it, but listing it as technological breakthrough. I spoke about this yesterday with the research attracting attention from the United States government. Well, they were funded by the Pentagon. So there was $9 billion that they put out worth of cloud computing contracts. This was back in 2022. Under the previous administration, they split them between 4 US tech giants. One was Microsoft, as if they need money, but they secured this contract to develop the Integrated Visual Augmentation System. Those are short IVAS for the United States Army. Those are the headsets that look like the gaming sets that they're coming out with for Meta. Now, this project is aimed to equip the soldiers with these headsets to improve combat effectiveness, and we spoke about this before. However, they're partnering with defense contractor Anduril. Now, Anduril Industries is main maker of drones, military purpose drones, if you will. Very small factor, numerous large-scale numbers, and acting in coordinated efforts. So Anduril is that company. So I just want to point out Microsoft has had for some time a well-established relationship with the United States military, and they've been covering a lot of their cloud services and research development. So a lot of things along with expanding so that they could be ready for ChatGPT, the latest models from OpenAI for the artificial intelligence. So moving forward in that sector. And just something funny that I wanted to leave you off with. Jeff Bezos of Amazon is asking followers who they'd like to cast as James Bond. Not long after Amazon announced they basically bought out all rights to the 007 James Bond franchise. So if you're a fan, I've been a fan for a long time. Who would you like to see as James Bond? I think that's rather interesting. So if you would leave something in the comments, even if it's just a good morning and a coffee cup, I'll say good morning back to you, or at least like your comment. Thank you so much for being here. And until I see you again, have a wonderful weekend, my friends, and stay free.